Hello, good afternoon. Sure. Yeah.
Hey, Anthony, I can hear you.
Hi, guys.
Hi, everyone. My name is Xavier Ballister. I'm a director over at Angel Investment Network. We've been around for 20 years now. We've got 40 networks of angel investors around the world, covering about 90 countries and something like 350,000 registered investors. My little team works on just 2 companies a week, usually at seed stage. And yeah, we're totally sector agnostic, and we will actively go out and seek investors for those businesses, usually UK businesses, but we have been helping some companies also in Singapore, Hong Kong, and Switzerland and Australia. So yeah, that's us.
Good afternoon, everyone. I'm Antonio Baccari. I'm one of the partners at Field Venture. Field Venture is an early stage VC fund based in the UK that invests globally in early stage startup seed to Series A, with at least one Italian co-founder. We started back in 2021 with our first fund. We have 11 investments so far, and we're now fundraising for our second fund. Our idea is to basically support Italian founders across the globe, and that's to basically to fill a gap that's there between investments that are not coming in right into Italy. But we are very active also in the UK with angel investor groups and a full network of VCs that know us, and we can introduce them the companies that we like, but are not part of our mission of the fund. Happy to be here and answer all your questions.
Hi, everyone. So, Guy Pengelly, co-founder of Varesco Group. My background is in accounting and finance. I qualified as a chartered accountant with Deloitte, did a couple of years of investment banking with Peel Hunt, and then went and joined a boutique asset manager running the British Innovation Fund, which was a UK venture fund investing into UK university spin-outs. Now joined up with a couple of others to set up Varesco. We focus on all areas of food and agriculture. On the advisory side, help with fundraising, buy and sell side M&A, commercialization advice, and interim management. And then we're also looking to raise a farmland fund investing into Australian farmland at the moment. Cheers.
Is that me next, Anton?
Sorry, my mic was off. I say it every time, just be investor ready. Don't go out to investors without different sets of decks, a good data room full of stuff where they can come in and do their due diligence. Don't jump the gun, basically, is what I'm saying, because if you give a bad impression to investors and don't provide them with the right information and look like you know exactly what you're doing, then that reflects badly on what you might do with their money. So with investors, you usually have one chance. It's like going to a restaurant and having a terrible meal. You're not going to go back. So make sure to get it right first time and speak to as many other founders about what constituted for them getting investor ready. And don't try and hide any kind of figures or anything like that. Don't try and lie about anything. Anybody who's going to do their due diligence will find that out, and then it's going to be even worse for you.
Anton, shall I do an intro because I missed my turn? Just quickly. Okay, I'm going to do it anyway. Hi, everyone. Richard, Christina here. I very quickly with my intro, I had launched a company in Australia, had an exit, was on the founding team, moved to the UK. As a result, now the principal director of Founder Institute, been running the accelerator for the London chapter for the last 8 years, have helped many founders get investor ready. Many have graduated our program and gone on to receive funding, some now even in their Series A. Advisor to several tech startups here in the UK, also launching a new venture with a colleague, co-founder in launching an accelerator or like an accelerator for various universities in the UK to help their master's students in entrepreneurship. So that's a little about me. On the do's and don'ts, what I have today is for founders to have a clear vision. Often, I see a lot of pictures from founders, multiple every week and month, and founders will start talking and pitching their idea, but then within the first couple of minutes, you don't really know what the business is doing, what they're trying to achieve, or the problem that they're solving. So I say the very first thing a founder should be trying to do to be investor ready is to have a clear vision. What is it ultimately they're trying to achieve in terms of a business position? For the don't, this is a bugbear of ours. We see quite a lot of overestimating of the market size that they're intending to launch their business in. We often hear lots of millions and billions, and the reality is when you start breaking it down, it's actually not that. So be realistic in terms of the market potential. Don't overestimate. That's all from me.
As I think it was me now. So on the do's, I would say be very careful to tailor your investor outreach. There is nothing worse than receiving what is clearly a blanket email that has gone to many different people. Make sure that you research the investors that you want to target, why you want to speak with them, what they can add. Obviously, there's an important amount of strategic value add that an investor can bring and should bring other than just funding, and goes for, if you're going to use things like ChatGPT or whatever to help you draft emails, make sure you sense check it, because it's also very obvious if that's what you've been doing. So it makes a big difference to receive an email that's clearly done some diligence into you as an investor, understands what you're looking for and how you can help, and sets you on a good pathway at that point. And then a simple one here, but don't give up. It is a numbers game. It's a bit of a cliche that, but it's true. The more people you can speak with, the more you learn about how people view your business in a positive manner, and also what they're the issues they may have and what you need to improve on, and therefore it allows you to learn and develop how you're going through your fundraising journey with every conversation that you do have, and eventually you will come across someone who wants what you are offering, and therefore you've just got to speak to as many different people as possible. Doesn't necessarily need to be investors, because you never know the conversation you might have with someone who knows someone who therefore might be interested in it, and it goes from there. So I'd say speak to as many people as possible. Don't give up. It's continues to be a tough fundraising environment. I've been saying that for a long time now, but keep at it.
Yes,
well,
I would add.
Go on.
I would add that it's really important when you are starting your fundraising, so also a pre-seed and seed, to find the right channel of investors that you want to bring on board. So if you are a pre-seed, don't go and ask a large VC with a big ticket to invest. So try to stay focused, try to understand which is your target, what kind of investors do you want, and also what kind of value do you want. If you're building something very specific, probably you would like in a very early stage, someone that has competences on that subject. Later on, you can go and ask for funds to bigger funds. On the don'ts, I would say never try to hide things, and try to be as open as possible to criticism. Most of the times, founders go through journeys, and they need to evolve and change their idea, modify and pivot. And sometimes the hints comes by talking to investors at the very early stage. But most of the times, founders don't take into account, and they go straight for whatever they have in mind, which most of the times is not what the market really wants or what the investor really wants to see in a founder. So try to be as open-minded as possible, and try to be receptive and build on the comments and the feedback that you get from whoever you talk about your project.
Wow, that is amazing. Thank you very much to all four of you gentlemen. This is pure gold. Well, a quick reminder to everybody, this is Startup Fundraising Q&A. It's our 134th session. We've been doing these for 4 years, where we've had over 270,000 people come through these conversations, and none of that would have happened without the amazing 4 panelists we've got in today and their other fellow panelists. So show them your love. And by the way, panelists, if you'd like to drop in your LinkedIn URL in the chat, because this chat will be saved alongside the recording, please feel free to do so. On the other hand, you can ask us questions on anything to do with fundraising today, whether it's, let's say, when's the right time to fundraise, who to reach out to, how much should you ask, how to do a pitch deck, how to deliver a pitch, how to prepare for due diligence, and all that jazz. All you have to do is, if you're in our Microsoft Teams call, you just drop your question in the chat like Pauline has. I then give you the mic and you ask our panel. As for the others that are tuning in via LinkedIn, YouTube, Instagram, or Facebook, please remember we are unable to monitor your questions there live. So you would need to jump on the call here on Microsoft Teams. It's audio only, and there should be a link on all of those live streams. But if you can't access it, then simply go to our website, startup-to-scaleup.club. Find today's session, which is Startup Fundraising Q&A 134, and then click join. It's a quick registration, by the way. That gets you a link to your email, and through that link, you can then join us here. We've only got about 39 minutes. That means only about 3 questions to answer. So don't leave it for last minute, because that time will fly away way sooner than we would like to. So you need to be here. And by the way, if you're finding any value in this, please feel free to share it with people on social media. The more, the merrier. Now we'll go on to Pauline, who is the co-founder of our Startup of the Month. Pauline, can you hear us?
Yes, loud and clear, Anton. Good afternoon.
Very good. Well, thanks for joining us again. The floor's yours.
Hello, panel and everyone. Now, I'm turning attention to crowdfunding. My co-founder Becca and I are considering this. So what are the pros and cons of the different types of crowdfund models? And what should we bear in mind as a startup tech business? Give you a chance to digest that one.
Thank you very much, Pauline. That is a very good question. What I'm going to do now, I'm just going to see how we're going to do this. So try to keep it to 1 minute each, please, team. Let's start with Rich, then Guy, then Antonio, then Xavier. Your 1 minute of glory starts now, Rich.
Thanks. Hi, Pauline. Look, I'm a bit of a fan of crowdfunding. We work very closely with a couple of the big names, Seeders, Crowdcube. One of the biggest pros is that you effectively get an audience as part of that. So, you know, I'm a mum and dad investor as well. Like I've invested into a lot of these startups. And what do you do when you socialize with your network and friends? You tell them, hey, I've just invested in this really great product that does this, and then they look at it. And so you've got these ambassadors. It's like a marketing tool for you, as well as getting money through the door. I don't know whether I'd call this a con, but most of these platforms will want to make sure that you have some funding started. So I'm not sure of your position, but if you think you're just going to sort of, hey, can you set me up and, you know, let's get the campaign going, and you're trying to raise, what, because you haven't mentioned it, I'm just going to make it up, 500,000, they'll probably expect you to have a good third of that. So, you know, they'll, you know, in a friends and family and so on. So maybe if you went and said, look, I've got 150,000 already raised through friends and family, and the rest I want to do as a 500 total campaign on your platform, that's when they find you interesting. But if you don't, it's rare that they'll even look at you and accept you. So there's a challenge there. You need to start the fundraising prior, usually, to get into a good platform like a Seeders, etc. I have a lot more because I am quite experienced with crowdfunding, but you know, reach out and let's have a chat further on that.
Thank you, Rich. Guy?
Hi, yes. So I think the pros are pretty well summarized. You know, it's just about going out in front of as many people as possible, right? And a crowdfund platform will allow you to do that. I think another useful or something that's also helpful is they have a pretty set template of documents that you need to make available to potential investors, and that's obviously a great starting point to ensure that you've got things that are the basics in place for any investors to be looking at. And also, I guess, you know, if you look and you have a peruse of the site, there's lots of other examples of what people are up to that can be tailored to your specific product. On the con side, they tend to be a little bit more expensive than can be a little bit expensive, but if you raise your money, then so be it. It's also, the tickets will come in smaller kind of sizes than potentially one or two larger investors who could raise the whole round. But that said, most of these places, I'm pretty sure, have a nominee structure whereby they pool all the investors together to be one line on your cap table, which does make life easier. In terms of kind of what you should do for the business, I think that it's differentiation. You know, you just said that you're a tech startup, and obviously there's a lot of tech startups out there. So what exactly, a little bit more on what the business does, and then a kind of, you know, what have you got that's different from what's already out there, and why therefore should people be investing into you guys? What's the, another horrible cliche I've put them today, but the secret sauce, and you know, what is the problem and that you've identified, and why is your solution the best thing to solve that problem?
Yes, I will add that in terms of pros, I think it works. Crowdfunding works really well when you basically want to build your customer base. So it gives you a lot of visibility, like Richard was saying before, but also at the same time allows you to raise capital. On the con side, besides the fact that it's probably expensive, and you know, you can probably start working with other fundraisers separately, and that might be more expensive, but at the same time they can bring you bigger tickets than a lot of small investors. I think that the con is also because you are a tech startup in an early stage, whether you're looking for something more than just money from your investors. So if you're looking for some qualified investor that can come and put some money in and also help you growing the business, then probably crowdfunding is not the place to find them. They generally work really well with projects that have something to sell or something that is appealing to the audience that they have. But if you're looking for some competencies, some specific network that can help your company grow and also build for your next round, then probably crowdfunding is not the right place. You can always mitigate, so you can always do a bit of your fundraise through crowdfunding and the rest through some more qualified investors. But it's completely up to you.
I totally agree. Do a part of the raise with crowdfunding. Obviously, if it's more B2C product, that's even better, because if it's something very, very technical, deep tech, it might be harder. But be aware that, I'll call it a bit of a con. They do rely on you heavily to bring in money yourself. And so if you are, before you sign up with them, see if you can't negotiate. A few of my clients have been able to do this, is once it starts, if you're bringing in ticket sizes of 20K, 10K, something like that, I don't think you should have to pay 7% on that. You found the money, you're just using their SPV. So maybe something like, if you raised 20 grand tickets plus, you can say, let's try and have a deal with them whereby you pay 2% on that or something like that, because you might have had to pay someone else a fee to get that 20K ticket in, and you're going to pay double fees on it. So yeah, be aware that they will require you to bring in a lot of your own money, not just, like was mentioned before, that initial chunk, but also once the project starts, it will be up to you to market a lot of it, and they will try to charge you 7% on absolutely everything.
Oh, that's quite some advice. Thank you very much for all your golds there, panel. Pauline, just to kind of go in line with what everyone said, but for me, some of the most successful, or perhaps the only successful crowdfunding campaigns I know of, are the ones that actually had at least half of the money committed before they went there. Crowdfunding can be, especially as it was said here, especially when you're B2C, and you are, can be a brilliant marketing campaign and great branding exercise, but it's also very time consuming, way more perhaps than raising through angels and VCs, and definitely costlier in terms of cash. Whilst angels and VCs, it can be costlier because you're giving up equity. Fundraising through that can be costly in terms of cash at hand, and you need quite a decent team to do that. I've seen it done well. It can do wonders, both in getting new business, and actually mainly getting new business, but also raise some money. But you definitely need to have, in my experience, half the money ready, committed, so that literally from the word go, those people that you have it committed, they go onto the platform and put their money where their mouth is. Go on, Rich.
Anton, I was just going to add, like the comment that was made before, I can't remember who said it. Look, as I said, I work very closely with these platforms through FI, and they're very negotiable in terms of the amount, because I agree with that comment. It's like, well, if I've done all this work and bring in already half, or usually it's about a third, why should I pay the fee on that money? And most of the time they're very negotiable if you mention that to them. I'd be surprised if you said it was a make or break to run with them or a competitor platform. I'd be surprised if they didn't accept those terms.
Yeah, can I also add something? Be aware that crowd, and Rich, I don't know whether you've seen this as well, but it's happened to a number of clients of mine who have been seduced into crowdfunding with a really big valuation.
So you're a co-founder, Pam, and let's say they'll say, oh well, 10 million valued business, blah blah blah, they'll get in this money at that valuation. Be careful to check that your valuation on there is correct. Talk to other people before you go. It sounds great to have a high valuation at this stage. You think, there's two of us, we're worth 5 million each, we've got this great company, it's worth 10 million. However, if it's overvalued now, at the next stage, they don't particularly care about your next stage. They want the money in now. So I've had many clients that have been overvalued at this crowdfunding stage and then go on, and then they don't hit milestones that will reflect even in the next round a 10 million pound valuation. I'm just using 10 million as an example. But if you don't hit certain milestones and look like a real 10 million pound valued business in the next round, then it's going to be really tricky to raise another round. You might have to have a down round, which is never a good look. So get second and third and fourth opinions on valuation.
Well, that was a masterclass.
That is a very good point.
I wasn't sure if I was supposed to respond to that, but Anton, if I may, I totally agree with that last comment. And look, most of the time, I think someone else brought this up, that you use crowdfunding as a secondary source, get funding and then top up with crowdfunding. Usually that method resolves this, because even with a friends and family round, depending how big it is, you'd set a valuation. I mean, I do know of some founders not even having a cap table for friends and family round, which I completely disagree with. Others may not, but I think once money has been raised before the crowdfunding campaign, which is usually what they want to see, it generally irons itself out. I've seen one bad example of what was just being said, but generally I feel once it gets to crowdfunding, the valuation of the business is usually set in the correct at the correct level.
Thank you very much to all of you. One last bit of advice, Pauline. What I would explore, if I were in your position, would be to look at accelerators, but only the ones that offer you cash, not just prepping you and getting you ready. Only the ones that offer you cash and offer it for a decent equity. Try that, work with that accelerator. In the meantime, you try and gain as much traction as you can. Speak to friends and family and fools, as it's vulgarly known, and see if you can get any angels ready to then go onto this crowdfunding campaign when you're stronger and you've built something and you've gained some traction, and that could be a brilliant ticket. Now, I know it's easier said than done, but I've seen that do miracles, that kind of route. I hope you found it helpful, Pauline.
Oh, immensely. I think it was a masterclass in how to do crowdfunding. So as we develop Reggae Calm, we need to remain calm and look at it from all angles. So yes, very useful. Thank you very much, panel.
That's brilliant. Thank you very much for joining us and asking your question. We have a few more questions. So we've got one, where is it? Mangaliso. I hope I'm pronouncing your name right. Let me find you, Mangaliso, and give you the mic for this, because it's not really UK focused. If we can, or EU focused, if we can spend not so long, but keep it to 1 minute each, panelists, please. I'd really appreciate it. Mangaliso, can you talk?
Yeah, I certainly can, and you pronounce it perfectly. Thank you.
Very good. Please take it away. Introduce yourself quickly and then ask your question. And
Sure,
panel, if we can keep it to 1 minute each.
So I'll be brief. So my name is Mangaliso Vilakazi. Formerly investment banking. I spent quite a bit of time working in the UK and started transitioning more into the startup VC space. Now, I think it's very easy in investment banking to secure as an advisor. I think good mandates and other people who can invest. But in terms of startups, especially in Africa, what I am struggling with is building a credible network of other VCs and investors who happen to be across the globe, and being able to reach out to them with, successful looking at pitch decks, etc. How does one go about doing that in a way that's not bothersome as well?
Thank you very much for that. I will defer this for now to our panelists. So we will start this time with Guy, Antonio, Xavier, and Rich. Please keep it to 1 minute each, fellas.
I think it's a difficult one, but it's going to as many events as possible and just general networking and seeing where those conversations lead. I mean, we're slightly different because we're food and ag focused, so it's not the biggest world within that industry, and therefore when we're pretty sector specialist, so we know most of the players within that industry and have kind of proven ourselves with our track record in terms of doing that. So, are there other ways that you can get in front of potential investors? Is there other bits of advisory you can offer them to start that conversation? Are there any particular accelerators that focus on those less developed markets? Again, it's not my area of expertise, but I would have thought there will be accelerators that are looking to do bits and pieces within Africa and will know those kind of investor networks and therefore getting them in front of them. So yeah, I'd say lots of events and look at the accelerator model to see who is out there.
Thank you very much, Guy. Antonio?
Well, I probably deal with the same problem because the reason why we created our fund is to support an overlooked market, which is the Italian one, which is closer to the UK compared to Africa. But I think the key of success is on one hand to be engaged with the local community and be specific on the fact that you are dealing only with a specific niche. And once you establish your credibility, you can then basically start promoting deals that are they must be quality deals. I mean, the big problems that we face are deals that are not good, and they're not good for the European market. And when you try to sell them to the UK market, it's even worse. So you need to be very, very conscious that it's important to basically have like 3 or 4 or 5 deals that are extremely well positioned to be successful even in a market like the UK market, and then just moving on those deals, not trying to bring hundreds of deals in the UK. I was saying before, we have a lot of in the UK. There are a lot of minority funds. There are some people that are only focused on Africa. I know a couple of them. So if we can exchange contacts, and I can send you those contacts. So try to build your network within that space, and then you can start bringing the projects from wherever you want in Africa to Europe and UK.
Thank you very much, Antonio. Guy, and then Rich, please.
Xavier, I've just been.
I think it's over to me. Yeah,
I've lost my marbles. Sorry,
yeah,
I meant Xavier. My bad, Guy.
Don't worry. I mean, if you're looking for investors into startups in Africa, it's an angel. Those are angel investors usually that are going into startups. What you need is probably some kind of angel investor network. If you've got quality, as Antonio said, if you've got quality deals that you really feel strongly about, we have networks in South Africa, we have one in Kenya, and we have one in Nigeria. So pitching it on there and seeing, we spend a lot of money and time in trying to attract investors to our network. Sorry, this is a bit of a sales pitch, but it's the only thing that really springs to mind at the moment, apart from obviously going to events, has been mentioned before, and trying to get close to the main African hubs where there's going to be a decent ecosystem, which I imagine, we've looked at them and we've thought that those were the 3 spots where there are the best ecosystems that we found so far.
Thank you very much, Dav. And last but not least, Rich.
Yeah, look, I think most has been said, Anton. So without sort of regurgitating that, you know, look, I think there was also in your question, your written question, you know, having an advisor help you connect you quicker. You know, I know some. Our accelerator works with a couple, but you know they take a fee. So you know it's like anything. You know, you want the convenience and the speed. You got to pay for it, and it'll cost you a percentage. I'm not saying 1%, but a percentage of what they will help you raise. If you're really that sort of blindsided and you don't have a network, then maybe this is a good idea. We usually tend to encourage our founders to do the work themselves, like you've heard been said already. You know, it's not easy. You don't just waltz through a door and go, here I am. It's a lot of work. It's a lot of hustling. It's a lot of reach outs to people on LinkedIn and other platforms. It's a lot of networking events and going and introducing yourself and meeting people, and then them giving you introductions to other people. There is a company, though, I will mention that we started talking to, because we have a lot of African founders in our accelerator, the StartUP Wise guys. So just I'll look them up and put it in the chat. But I do know they are very much investing in African startups. So it's just finding companies like that. I don't think there's any magic formula, and that's really all I have on that.
Thank you very much, gentlemen. Mangaliso, where are you based, buddy?
I'm based in Johannesburg in South Africa.
In Joburg.
And I think that's been very helpful. Thank you
very
so
good.
much.
You're very welcome. Here's my quick 2 pence. I'll put in the chat 2 LinkedIn URLs. One is a colleague of Rich, who is the director, I believe she still is the FI director for South Africa, Keshni Mara. She used to join our calls. The other one, it's a chap called Rudvik Deepak. He's now based in Canada, but does a lot of work in Africa. And in terms of what to do here, in terms of getting more people, I would reach out to each and every Western embassy in South Africa and maybe some of the other countries, and speak to that trade or economy. And sorry, if you can mute because it's creating an echo. And their trade or economy, basically, and say, which investors do you have investing or interested in investing in the country already? But what you want to do, all the investors here, they know, they like to go to places and jurisdictions that they know and they know how to deal with. So it's very hard to get somebody out of the blue to want to invest in a jurisdiction they've got no connection. So do that. The second part is look at the diaspora. You'll have a lot of kind of wealthy South Africans, for example, or Nigerians, or whatever African country that is in the West, or they're still there, that can act as investors. And last but not least, what I would do is look at accelerators like the World Food Program and others. They're the ones that are investing there. Often they have programs of sort of like partnerships with other investors and VCs. Find out from them who are those investors and VCs. And last but not least, in terms of how to kind of gain that traction and credibility for yourself, only look at startups that you are 1 billion% sure that whatever money they're trying to raise, this investor that you speak to will make 33x from that investment in about 5 to 10 years. Only introduce those, and only those and nothing else. I hope you found that helpful, Mangaliso.
I found it extremely helpful. I've jotted all that down. Thank you all so much.
Very welcome. And by the way, if you've missed anything, all these are being recorded. You can find them all on the live stream, but also here where you've registered. Now, we've got about 13 minutes to go, so I think we need to spend a bit less time in the future questions. Who's asked a question? Mangaliso. Then we've got David. Okay, so I think we should, the one that was sent in to us. Okay, so this is a gamified language learning for young children in Glasgow at pre-seed. She says, we're developing a gamified app to teach young children new languages with no connections to edtech investors. Our gamified language learning app targets young children, but we're limited in our connections to edtech investors for a pre-seed round. Are there UK-based accelerators focused on edtech that could facilitate these introductions? Or would it be better to attend edtech events like BET? Oh, I don't know that. Okay. To directly connect with investors? Additionally, are there edtech-focused angel groups who are open to cold approaches from founders in early development stages? Right, fellas, what we'll do is we will start with Antonio, Zav, Rich, and Guy. Let's try and keep this to a minute or under, please. What would you do in this case? Antonio?
I would probably do everything that you mentioned. So I would go and try to reach for UK accelerators because there are a few that are focused on edtech. I will reach out to. I would go to events. I don't know BET either, but I'm pretty sure that should be interesting. At the same, I mean, when there is an event out there, you can always check the list of the people that are in the panel or that are attending the event, and if you find them interesting for your business, you can just reach out and try to contact them even before the event, and then eventually meet them in person during the event. For angel group, I think there are plenty of angel groups that can invest in edtech in the UK. Even if they're not too open about cold approaches, I mean, you can see who is part of this angel network, and try to send an email and try to have a first contact with one member of the group that then will be able to be your sponsor on the rest of the angel group.
Thank you very much, Antonio. Zav?
I would have a sneaky look to see if there might be some grants available. I don't know whether those might have evaporated a bit post-Brexit if you're teaching foreign languages, but it doesn't hurt to often a little grant can really give you that initial boost, whether it's 25, 50 grand, something like that. But there are companies such as Granttree that will, drop them an exploratory email, and they'll let you know whether they think there's anything to it. If they hold your hand and help you find the grant, then they'll charge you a percentage of that grant, but it's still it is still not giving away any equity.
Do they not want money up front? Do they not want money up front?
No, not usually. No, they take
Really?
a percentage.
Okay.
They'll take a percentage of it. But I mean, I've got friends. I've put my LinkedIn in there. Anybody here that wants to ask me any questions about this kind of stuff, I've got friends in places like Granttree that will happily take a look at it, give me a summary of the business and what you think, and then they'll give me their honest opinion on whether somebody there will work on it and get and find some money. But they'll usually take a piece of the other side once the
Zav, can I ask you a favor then? Because one thing we struggle, as you've noticed here, is specialist on grants. Can you get us one of those friends to come and join us from time to time on our Thursday call?
Okay, yeah, I'll see what I can do.
I'll
remind me during the week, mate.
I will. I'll buy you a drink if you buy me another one after, if you bring somebody.
Deal.
Thank you. Rich?
Just to chime in on, we're actually friends with the Grantify group, so we work very closely with these guys. There is a current innovation fund the government is that has available to a startup like this. It is a lot of work. I've done both. I've helped founders write the submission and use Grantify separately. Have had successes in both sides. I think it's a really good point made to explore. But there are, look, I'm now not selling myself. We are a generic accelerator. We're sector agnostic at Founder Institute, but there are absolutely verticals that just focus on EdTech, and you might want to look at a couple of like UCL EdTech Labs accelerators, probably one of the most known in London, and also Bethnal Green Ventures. So they do focus
Absolutely.
just on that. So try these guys. You know, we work with a lot of EdTech founders in our accelerator and have a lot of mentors who work in EdTech space. I also work in EdTech because I'm working in universities personally. So I'd be happy to help you if you connect on my LinkedIn.
That's brilliant. Thank you very much, Rich. Sorry, last but not least, Guy.
Yeah, I think probably not, excuse me, a huge amount to add beyond what everyone said. I think it's well covered. The only other thing I'd say is potentially looking at some of your competitors in that early stage and seeing who is invested in them, and if there are the same names cropping up, demonstrates that there are investors who are sort of spreading their risk, as it were, and therefore maybe good for you to approach. So yeah, I mean, they'll have an understanding of the space if they're already invested in that sector. So worth reaching out to.
Thank you very much. I'll be very quick at this. Reach out to the enterprise organizations in Scotland, reach out to Innovate UK, and also do 2 searches. One on angel groups and networks and syndicates in the UK, and 2 in the BVCA, British Venture Capital Association. Do a search on there and see which ones have in their portfolio they've got EdTech companies. And that's, I guess, pretty much it. We now have one last question. It's from an ethical founder, fashion founder in Bristol. She's at seed stage and used to be a sustainable fashion advocate. She says, we're launching a sustainable fashion brand and considering a convertible note to bring on our first investors. What potential pitfalls should I be aware of when structuring a convertible note for early stage fundraising, particularly when it comes to valuation caps and interest rates? That's an interesting one. I'm seeing a lot more convertible notes or people talking about that in the UK as I used to, because it used to be mainly in the US. So I think with this one, we can start with Zav, Rich, Guy, and Antonio, please.
So, from my knowledge, I don't think convertible loan notes are eligible for SEIS or EIS, which, if you're in the UK, obviously is a big draw for those initial investors, especially SEIS for the first 250K. But a subscription agreement, an ASA, could be the one, because those do qualify for EIS, and they're pretty easy to set up with seed legals. They have lots of advice. There's vested as well. That's very good. So these kind of companies will be able to hold your hand on that front. But I would say an ASA, I've found that UK investors are trickier to convert into convertible loan notes than maybe they are in America, where we're more common. So I would look into that, because obviously ES and EIS are your friends at this stage.
I hear. And Seed Legals has fast or something, or whatever they call it. I can't remember now, but thank you for that,
Yeah, that's right, yeah.
Rich. Rich Christina, can you hear us, buddy? Okay, Guy.
Yeah, I think what Xavier said was spot on. The SEIS, EIS bit is pretty critical in the UK, and I would also thoroughly recommend going to Seed Legals, because they'll have a very good database of information that you can go through, and also will set up a pretty boilerplate template convertible if that is the path you go down. I think things to look out for if you do that route, are there any automatic conversion clauses in there which are going to potentially be an issue for you? If you know who's choosing whether the note's repaid or converts into equity, what are the triggers for that to happen? Is there a redemption premium attached to repayment? That can be quite kind of aggressive in favor of the investors. Valuation caps will probably come in, and that's fine if you set them at a high enough level that you don't then overly dilute yourself or the existing shareholders on conversion. In terms of interest rates, yeah, look at you, make sure they're not compounding, because that's going to cause you a big problem if your convertible stays out for a long time. Those are the things I can think of kind of off the top of my head. I would say, I can't give you investment advice, but I would imagine that using an instrument that is EIS or SEIS eligible at this point is probably a better route.
Here, let's see if Antonio is on Anthony Rose's payroll as well as Dav and Guy. Antonio?
Yeah, yeah. I mean, I think I'm not a big fan of convertible notes because I think the challenge they have in Europe in general is the fact that whatever cap they have is generally the same amount that the company will raise in their next round. So there's no massive upside from the investors that actually believe in the company at a very early stage. So when you want to create a convertible note, you try to put a cap that is fairly appealing for the investor, but the mindset of the investor is that you will go way beyond that cap, so they can actually get a better deal on the next round. Most of the time that's not the case, and so if you put this combined to the the SEIS and EIS fiscal advantages in the UK, I think it doesn't come across as a good solution for startups. I mean, it could be played as a very good advantage for the startup itself if you manage to just raise the funds with no interest and a good cap that you are confident to beat in the next round.
Thank you very much to all four of you. I really appreciate this. My only advice of this would be to join us on the legal Q&A we have in April. I believe that would be on the 11th of April. Yep, 11th of April, and ask the lawyers we have, because I'm not an expert on this. Now, it is 1 o'clock. I see Guy needed to leave. Davia needs to run too. Antonio, do you have any parting words for us, buddy?
Well, I mean, I always thank you everybody for being here, and we are very open to hear and help even founders that are not Italian. So if we can be of any help, just reach out, and we will be happy to listen to you and have a chat.
Thank you very much, Antonio. Well, huge thanks to everyone that tuned in today. Those of you that were on the live streams, whether it's LinkedIn, YouTube, Facebook, or Instagram, but mainly those of you that tuned in here onto our Microsoft Teams call, please remember to do that next time. We run 6 regular sessions: Monday's talent, Tuesday's product and tech, Wednesday's growth, Thursday's fundraising, second Friday of the month it's legal, and third Friday of the month it's finances. That all from 12 to 1 p.m. UK time, and you can RSVP to any of them via our site, StartUP2ScaleUp.club. When you actually get there, you want to join our WhatsApp community, which is a highly curated peer-to-peer network, and you won't only join this network of founders, investors, and operators, but also get alerts to future sessions that we do if you join that community. As far as my parting words are concerned, just remember, the startup journey can be both challenging, but also quite exciting. So try to have some fun in the meantime, and be kind to yourself and everyone else for that matter too. Otherwise, you have a great weekend. See you on Monday for Startup Talent, where we'll help founders find, hire, keep, and empower the right people. Thank you again, and God bless you all. Bye-bye for now.